upside. So now that we've mentioned all of that, let's just go down to the 15-minute and just see how we can integrate the 1 hour order blocks with 15-minute order blocks to be able to improve our risk to reward and to show how they work hand in hand, and just clearly to show how fractal the markets really are. Okay, so here we go. So if we look at the exact same example, I'll run 2 charts just to make things a little bit clearer in this case. So what we can see here is we have our 1 hour order block here, which broken structure right there, and we can see on the 15-minute we're creating a series of higher highs and higher lows. We can also see on here that once we've printed this high, looking at the substructure, you can see that we're starting to make lower lows, very small lower lows I should add, because we make a lower low here, then break the high. What we can see is we violated structure here and here. We can look at here as a potential for a very quick intraday position using an order block here. And again, if I just use the same logic of the refinement, we can see that this would have been our order block, but price pierces it and the next candle doesn't do anything. But what we can see is the candle after that actually creates the momentum that then creates structure breaks. So we can see that. But if you were to take a trade such as that, knowing that you're more counter trend because you're seeing the higher time frame clearly impulsing to the upside, you would want to be targeting your 1 hour point of interest to look for essentially buys. So what we can see when price actually does tap into this 1 hour order block, we can see that price taps into it and then it pulls away. It breaks structure on the 15-minute. It comes back down. What we can see here is a bearish candle before the up move that creates the break of structure. It taps into it and it continues on. So what we can see if we just compare the 1 hour entry to the 15-minute entry, if we were looking at purely from a 1 hour perspective, we would have our entry right there with our stop loss right about there. So about 26 pips. And even if we're targeting prior highs, we'll use that as our reference point. We can see that we have about 2.8% trade on the cards here. Now, if I do the same thing, but I use the 15-minute order block, and one thing to note as well, when we have these type of wicks from an order block, it's best to place the stop loss under the wicks as opposed to at the block itself, or else you'll likely see some spiking just because there is liquidity sitting in that area. What we can see is we'll use a 12 pip stop loss, and again, same target. So we have 5.93% versus 2.8, so effectively almost 100% increase in the overall risk to reward that we can gain from that trade just from a small refinement here. But we can just see how fractal the market is. Once we've tapped into the 1 hour order block, we can see we've broken structure on the 15-minute, we've created an order block, we've retested that order block, and then continued to move to the upside. And what we can see, even though it doesn't break structure, we can see that we've created another order block. Price taps back into that, taps in one more time, and then continues. It just shows that the market is always constantly moving in a series of order blocks. It's just a matter of finding which ones make the most sense, that follow the rules of actually breaking structure. As we can see here, we did break structure, we did create an order block, we did tap into it and go. So multiple opportunities to be involved just looking at the basic structure that we are in a bullish trend, and we have this 1 hour order block. We can then refine it on the 15-minute and even lower. If I move on to example number 2, we can see again we had the break of structure here, which created our 1 hour order block. And what we can see on the 15-minute chart as well is we have that same break of structure, and we can actually denote that there's an order block that effectively shaves off half, a little bit over half of the size of the 1 hour order block. So what we can see is price then comes back down, just barely taps the 15-minute order block that sits right here, and then continues up. But if you wanted to wait for a little bit more confirmation, although this doesn't actually break structure, you can see that price does move away quite rapidly from that price point. Test it once, test it twice, and then explodes to the upside. One thing we'll cover a little bit later on is Wyckoff, but one thing that I will point out is what we can see from this market structure is actually an accumulation schematic, which we can actually look to take entries in this part of market structure, which would add confluence to taking that order block setup as well, knowing that we didn't actually break market structure. And then two other things just to make note of is, if I just move this order block out of the way for a second, you'll probably be wondering why I chose this candle versus this candle or versus this candle. And I'm going to sort that out right now. So initially, our order block would be just like that on the 15 minute using the bearish candle before a move to the upside that breaks structure. But what we can see, the next candle didn't actually engulf price. It didn't actually get any sort of reaction, any sort of large momentous move. So what we can do is move to the next candle. And what we can see from that is, again, if we look at the next candle, it did not really break the high of the candle. It's still very indecisive, not really a whole lot of volume. So we can move that candle just one more time, and what we can see is we get a true engulfing candle with momentum, strong full-bodied candle, and then the next candle is high momentum, full body, and then that's when the move actually takes off. So we've been able to effectively reduce and refine that entry and order block more specifically using that principle. So I just wanted to highlight that just so I don't create any confusion on that. And then we'll just move on, keep going through some more examples. So again, we can see that we have this 1 hour point of interest, which we would be able to see breaking structure down right here. That would be our 1 hour break of structure. So we can see that we have this bit of price action here. We can see that we've created a higher high on the 15 minute, then we've created a break of structure, we've pushed to the downside, we've broken structure yet again, broken structure yet again. So if we're wanting to trade counter trend, which can be dangerous and is only up to you to fully approach that if that's what you're willing to do, you can see we have this strong move to the downside that's broken the structure. And we have, again, we'll go with the bullish candle first and refine it. We have the out move candle before the down move that breaks structure impulsively. But again, we can see that the low of this candle, price didn't close or fill that. It was slightly indecisive. So what we can do is refine it to this bearish candle instead. And we can look at the move actually starts to be created right here. That's where the momentum comes in, that breaks the structure. And we can see price revisits that and then breaks to the downside. If you weren't convinced in that, you could probably move to the 5-minute chart and refine it just like that and continue the same process as well. But it just shows that, again, the markets move in a series of order blocks from block to block, whether with trend or counter trend, and you can use them to your advantage. So move on to this next bit of price action, following the same rationale that we're starting to see a heavy downtrend of lower lows and lower highs on the 15 minutes. And again, if I move back to the 1 hour chart just one last time, we can see that we're just about to break that structure, but we haven't quite broken it on the hourly chart. So again, we would be trading counter trend. We're becoming much more risky in our approach, but it just shows the concepts quite well, so I wanted to talk about it. So we can see in this case we have the low here. We've broken this low, we've created this wick here, but we've broken this low, broken structure again. We're basically putting a lower high, lower low, and then we form a lower low here. And what we can see is we have two order blocks in this case that we can take note of. We have this one right here, which we can see the clean push. This is the top of the range, but we also have this up move candle before a massive surge of liquidity into the market. We can see that this is truly when the momentum entered the market. We did have a strong push to the downside, but we can clearly see from price action these two candles are much bigger and stronger than here. So what we can see from a price action standpoint, that this is an order block and this is an order block. Now the best way to approach this, there's two different ways. One, you can put a 50% risk, or sorry, a 0.5% risk or half risk of whatever it is you're risking on this order block, and then the other half of your position on this order block, so that if price does tag you out, it tags you out for 0.5% and then goes. and tags into this one, and then you make up the loss here. Or what you can do is you can wait for it to tap in, and then if it does a secondary test, you can enter on that, or we can look at a potential lower time frame using the same context that we're using from the hourly to the 15 minute. We can use the 15 minute to the 5 minute just to refine and give you that extra confirmation for taking the trade. Again, we'll just keep moving on. We can see we have now broken structure again, and then we start to make a series of higher highs in the market here. From a continuation standpoint, again, counter trend, because now we would have been switching to creating a lower low on the 1 hour chart. But we can see we have this move, break structure, comes in, taps, and continues on. Similar to something like that, it just shows, once again, just want to highlight the power of order blocks and kind of how it ebbs and flows in the markets. But what I had mentioned on the hourly chart is once we broke this structure right here, we've broken the high, and we actually broke this high as well. We can see if we look on the hourly chart, we have an order block here. And what we can see, if I just draw it in real quick, we do also have a 15-minute order block within this order block. So there is the potential that price on the 15-minute could tap into that as well, similar to this example right here. But in this case, that didn't actually happen. But what did happen is on the hourly chart, we tapped into it and it took off. It didn't respect this or retest the 15-minute down here, or it didn't create a 15-minute order block to test. But what we can see, if I just move price to the right, we can see we created an hour order block and a 15-minute order block that price did respect. But using that, we can see price moving to the upside. We create a break of structure right here. We can see a down move candle with a large up move candle. It creates a retest and continues. It's debatable if you would have been tagged into that or not, and also using structure. Looking at this, we broke structure technically here. There wasn't much structure, so much lower confirmation trade. You're really just basing it off of these two order blocks here. But what we can see is as price continues to move to the upside, we had our hourly order block. Again, I'll just open up the hourly chart. We can see that we've broken structure right here, and we can see, again, I had mentioned substructure and that it would be cleaner on the 15-minute, which it is. We can see we've broken that structure, and we have a 15-minute block as well as the hourly block. And in this example, we can see price moves away from it, comes back, taps the hourly block, but doesn't actually